This is the interview. This is the discussion that so many of you have been asking for. The stock market is down nearly 6% from the peak. We have Mr. Dan Bird, who has been right and has receipts. So I don't know about you, but I certainly want to ask him, more danger ahead? Are we going lower? How much lower? And what the heck is going on? Because I am getting scared. Tech has been wrecked. What's going on, man? What do you see in the charts?
I have no idea.
Some videos over.
Right. Yeah, the market's lower. I've been saying it
Yeah.
wants to go lower anyway. This is
Yeah,
a
for
normal,
last couple of weeks you have. So we got
yeah,
receipts, like I said.
normal process. It's normal process that the market typically goes through.
Mhm.
I'll show you some of the charts. We can take a look at what's happened the last week in particular. And then we'll look at a couple of stocks too, like Nvidia.
Yeah. Yeah. Nvidia really broke down. I think it's down 20% from the peak. One thing I said on the daily financial news, I'd be very interested to see if you kind of agree with. I think this week is pretty dangerous. We're in the throes of earnings season, and Friday we have PCE, which if inflation goes to trend and it reports another hot number Friday, and the earnings are a disappointment, this could be a washout week, perhaps.
Yeah, it could. I don't necessarily think earnings will be a disappointment
Fair enough. I mean, yeah.
in,
I mean,
in general.
okay.
Like I said, this is a normal market process.
I like
A
it.
couple of weeks,
It's
ago, I showed what a normal process looks like, right?
yeah, you did.
There's a uptrend, there's distribution, kind of goes sideways, and there's a downtrend.
Yep.
And in either of those uptrends and downtrends, it doesn't go in a straight line. It goes up and down and up and down. You get higher lows and higher highs, or lower lows and lower highs. They're downtrend.
There you
So
go.
that's what we're looking for, and that downtrend may have just begun.
Yeah. So I hope people are watching this. At least I can't speak for others, but 3-4 minutes into this conversation, I already feel better. A lot of the articles coming out of the weekend have been very negative in headlines, talking about bear market starting, hard reset. In fact, that will be video number 2. What I hear you saying is, Zuber, stop it. Just calm down. This is normal. Let's look at what's going on. If anything becomes abnormal, you'll let us know. But as of right now, normal. That's what I hear you say.
Yeah, so far I think that's right.
Okay.
Let's
All right.
look at a few things, and I'll
Very
show
cool.
you why. I mean, it doesn't feel good naturally.
Well, of course not.
Feels better if the market just keeps going up and never reverses. Uh, so this is my website, breakpointtrading.net. If anyone's interested in getting my newsletter, you just click on this button right here. Investors Business Daily has finally switched to market in correction. Last week it was downtrend in peril, but now it's market in correction.
Okay.
Cut exposure to 0 to 20%.
Oh, go to
And
cash.
yeah, by the way, I update this every time Investors Business Daily updates their status. I update it on the front page of the website, and there's no cost. The front page is free to anybody. So,
yeah.
And one area too is these little charts right here. We'll actually look at the S&P, and you can see what's happened the last couple of weeks.
Yeah, that's a downtrend.
Right, and I've talked about this negative divergence for quite a while. Market goes up, but momentum is going down, and now it's accelerating down. So it's finally broke.
Yep.
Basically.
Yeah, you've been telling us for a while this was coming. So kudos to you again.
Interestingly, this dash line at the bottom is the previous all-time high, 48.18.
Oh, okay.
So we're heading towards it, heading back towards that all-time high down there. Now we broke through this gap right here. We closed the gap finally on Friday. Now, what a normal process for the market will be, and we'll see if this happens next week, because there are some things that might change that. I think earnings will come in okay. PCE, we'll see. PCE is not till Friday.
Correct.
So I don't think it's going to have a big effect next week.
Okay. All right.
But I'm actually expecting the market to rally next week.
Oh, really?
and come back. Yeah, that's what markets do.
Hmm.
Yeah, it's very oversold right now.
Okay.
So you can see this little area right here. This is the 21 day and the 50 day. 21 day just Friday, in fact, just crossed below the 50.
Oh, interesting.
And that's the area that it most likely will rally to,
Hmm.
right around 5,100.
Okay.
And then that's when we will know whether we have started
Hmm.
a new downtrend or
Okay.
not.
Got it.
Because I expect that's where our new lower high will form.
Got it. Okay.
Remember,
Make,
downtrend is lower lows and lower highs.
right.
We don't have either of those yet.
Got it. Okay. That makes sense. It's comforting.
We just have a downtrend.
Hmm.
So we're waiting for a lower low. If it rallies next week, then that's the lower low. And then we want to see how high it goes. For the downtrend to be over or negated, basically, it would actually have to break these highs
Yeah, I'd
over
have to
here.
go higher, right? Yeah, I
I'd
got you.
have to go higher than that, which I'm not really expecting that to happen. I think we're going to have a, you know, kind of a choppy market through the summer.
Yeah, and again, it's something you called months ago, which again, kudos to you. We gotta get you. You're gonna have too many nailed it t-shirts. I mean, I'm just telling you, it's crazy.
I'm going to start a nail it store
Yeah, you're gonna start reselling them.
resale.
Mhm.
So anyway, that's what I'm looking for. We'll see. It doesn't have to happen. Could
Yeah, of
just
course not.
continue. Could just continue going lower. I mean, especially if there's some significant news that happens.
Yeah, one of the things I don't know if you're looking at this. Well, again, I'm definitely more real estate and economy focused. We are starting to get commercial banks reporting on Monday,
Hmm.
and if we get some pretty spectacular, ugly reports from commercial banks, that's at least that's what I'm watching earlier in the week. I think we've got two on Monday and two on Tuesday.
Yeah,
Um,
commercial banks, they could actually miss their earnings.
yeah.
So yeah, that from an earnings standpoint, that's one area where they could potentially miss.
Hmm.
I think other companies will be okay in general,
Right.
but
Well, what do you
yeah,
think about
you're
tech?
right.
I mean, tech is getting wrecked, right?
Yeah, tech is
When I
back.
when I looked at kind of the internals, knowing that we were going to talk Sunday, it's the Magnificent Seven's getting smoked, right? Nvidia took out the king, and
Yeah,
we are seeing a little broadening out. So it'll be interesting to see how your rotation, right? You do that rotation chart, which is amazing. But
right.
yeah, what do you see in tech?
So there's the Nasdaq right there. It's actually accelerating faster than the S&P. It has a little open gap right down here. So it could trade lower the beginning of the week and fill that gap before it goes back up here to the 50-day again.
Okay.
It'll be similar to the S&P, but it could be quicker actually
Mhm.
because the acceleration is faster on that one.
Okay.
Um, Talking about that in my newsletter, which I'll just open my newsletter right here. This is last week's calendar,
Mhm.
next week's calendar for PCE. They didn't have forecasts when I put this out yesterday,
Yeah, I
so I
found
don't
it
know what.
this. I found it this morning. From memory, core is expected to go down to 2.7. Headline is expected to go up point.
Okay, all right. Um, yeah, I don't think it's going to make a big difference. One thing that's interesting that I put in the newsletter, you probably didn't see it, but we
Yeah.
have GDP 2 Thursday, by the way.
Yeah.
That'll be another interesting one.
Yeah.
Um,
Q1 GDP 3.4%. Sorry, Q1's not a recession.
no, it's not. We're not in a recession yet. We'll talk
Nope.
about that more in the next video, but this was an interesting article that I posted in here. And
I
it kind
love
of,
that chart. That is amazing.
yeah,
I have
this
not
is
seen that.
CPI breakdown. Look at housing. That's all housing right there.
Hmm.
And he goes on to say, talking about rents, and then have you heard of this? All tenants and new tenants rents?
Yeah, of course.
Yeah, figured you would. So this is a chart that kind of puts CPI with CPI shelter and CPI excluding shelter together.
Mhm.
All right, so the blue line is CPI with shelter.
Yep.
The green line is just CPI, and the orange line is CPI without shelter.
Yeah. Yeah, this is something I
So
calculated for my audience a couple of months ago, because it was really telling just how impactful shelter, aka owner's
yes,
equivalent rent, was.
yes, and this was enlightening for me too, actually.
Mm.
So this here is a chart of new tenant rents, all tenant rents, and then CPI shelter.
Hmm.
So new tenant is the green one. So the new tenants is dropping off a cliff.
Yeah, and this shelter calculation is so backwards looking. And
Yeah.
in fairness, it was equally terrible on the run up. Because the other thing, because I get a lot of people on my channel saying, Zuber, thank you for the education, blah, blah, blah. Um, you know, thank you for doing the math that shows me inflation without C or correctly calculating for shelters is, much lower.
Mm-hmm.
But in fairness, if you really want to look at this and go back to, remember when we printed CPI at 9.1?
Yeah.
That CPI print should have been like 14 or 15,
Right.
because just as bad as shelter is on the way down, it is equally bad on the way. So
Yeah.
I want people to realize that inflation back when we had a 9.1, it was more like 14 or 15.
Yeah. Exactly. So this last paragraph here was enlightening. I
Yes.
talked about commodities, having an effect on the CPI number. And one of the reasons it went up more than they forecast, which does have an effect.
Mm-hmm.
But what he says here is while rising commodity costs may soon exert pressure, the elephant in the CPI calculation will outweigh its small contribution.
No, I mean
So this,
that just goes back to your chart, right? It's 44% and it's mathematically going one direction.
right,
It's just slow.
right,
Yeah.
yeah. The risk
It's
to the
it's
Fed
gonna
is a slowdown in economic activity that threatens a deflationary environment.
correct.
And I think that will happen. I don't think it's going to happen this year, though.
Okay.
I think it's towards the end of the year and into next year.
Wow.
Is when
2025, huh?
let's say the effects of all this,
Correct. The effects. I understand.
right? The last chart I put in the newsletter was real estate related as well that I found
Hmm.
is the income housing gap
Yeah.
going back to 1985.
Hmm.
Just interesting.
Yeah.
You know, price to income ratio is 5.8 now versus 3.5 and 85. And 85, the rates were pretty high back then,
True. Absolutely.
right?
Yep.
Just that the price of houses has gone up considerably as well.
Certainly has.
So interesting real estate related stuff as well.
I like it. Can you send me
So
that square? I mean, I know it's in your newsletter,
yeah,
but do you have
this
a
one.
link to the source for that one? That's the one I want.
Yeah,
Yeah.
actually, I could. I'll send you the article, the actual
Okay.
article.
Cool. Thank you.
He's does great articles. I
All right.
put a lot of his stuff in my newsletters a lot of times. Not
Okay.
not the whole thing that he talks about, but just the important points. But they do a lot of really good research
Yeah. I want
for
to. I
me.
want to. I want to read that.
So notice here, this is the best large cap, best and worst for the week.
Hmm.
Look at all the worst:
Yeah.
Nvidia, Micron, Marvell, ASML,
Semiconductors. Wow.
Broadcom, Advanced Micro. I mean, 80%, 8 out of the 10 here are semiconductors.
Hmm.
Well, automobiles, Tesla. Tesla's at the
Yeah.
top of the list.
Yeah.
But look at the best. Look at the ones that ended up in the top. Wells Fargo, American Express, Morgan Stanley, Schwab.
Looks like rotation to me.
Yep, that's rotation. And this is and I talked about there's the rotation chart right
I
there.
love that chart. That's amazing. I love that chart.
Yeah, this is classic rotation right here. So here's XLC, which is the internet stocks.
Hmm.
It's breaking down, but it's lagging the other ones. It's actually holding up better than the rest. Here's discretionary. Here's the NASDAQ 100, and here's technology.
Hmm.
All of them rushing towards the lagging quadrant. And all of the defensive sectors, especially utilities. Utilities, look at that.
Just zoomed higher. Yeah.
Yeah, it's leading. I mean, utilities, and this is kind of what that article that we'll talk about in the next one was talking about. All of the defensive sectors are now leading. So real estate, energy, financials, staples, they're all in the leading sectors. And this right here actually shows you this is for the week. These are the sectors for the week. And you can see again, utilities, staples, financials, the only ones that are green. Healthcare is barely green, just
Right.
barely. But all of these defensive sectors are outperforming the S&P. Communication services, it did too, slightly.
Right.
So
yeah, that's going to be an
that is,
interesting week. I think you get Meta and Snap and all these other. I think it's going to be a wild week. And as usual, I think it'll be less to do with earnings and more to do with forecasts or guidance.
yes, that's true.
I
Yeah, and
I don't think guidance is going to be great.
yeah, I think they're going to hedge their bets. I think they're going to probably have lower guidance so that they can beat the numbers later.
Exactly. Well, think about Netflix. I mean, Netflix is a great example if you want to pull up that chart. I mean, if you looked at
Sure.
Netflix's earnings, I think they were both beats if memory serves, but then they go in and they say, we're not going to publish subscriber numbers anymore. And the
Right.
stock gets hammered.
Yep. It got nailed right there. Dropping
Yeah.
off a
So
cliff.
this is why I think earnings could be okay. And again, I'm an accountant, so I know how you can manage earnings. I think the guidance, I could not imagine being an executive going into this earnings call having anything but a conservative guide. You would have to.
Yeah, you do. You would have to. Here's Netflix right here. So Netflix estimated revenue 9.28. So they beat on revenue.
Mm-hmm.
I don't have an estimate for earnings.
Yeah, they beat on earnings.
Yeah.
And then they just made a business decision not to publish subscribers, which the market took as a sign of weakness and
now here's the estimate 4.52, and they actually came in at 5.28. So they beat by 16%. So they beat on top and bottom line.
Mm-hmm.
But right, just that, one statement of where they're headed for next year.
Yeah, so that's why I think next week. I actually do think next week's a treacherous week. I think next week is it's dangerous. You got commercial banks, you have tech, and it's all about the guide. I think the guide's going to be weaker than people are expecting. I'm concerned PCE on Friday. I know it's not till Friday morning, but I think we've had 5 inflation readings that have been hot. If we get a 6th and it's hot where the Fed looks the most, which is PCE. I mean, man, this week could be a washout week, but we'll see.
Yeah, I think the next week will be a washout week.
Oh, so okay. Well, you're the professional. You're the guy. You're the guy that does this every day. I am not a stock
I mean,
guy.
Who knows? Anything can happen.
Of course.
Who knows? But the market's very oversold. Let me show you something else, and I'll kind of highlights what I'm talking about. This is from VectorVest. So this is the VectorVest chart. So you can see it right here. I actually put the support lines on here. So you notice how big these red candles are.
Now, what am I looking at here? Just so
okay, so this
the
is
S&P or what is this?
This is the VectorVest portfolio.
Oh, so this is everything. Okay.
Everything. It's 9,000 symbols.
Right. I just didn't know what I was looking at. Okay.
Yeah, it includes all stocks. It includes ETFs. It includes everything.
Okay.
Everything in the market.
Got it.
There's not 9,000 stocks in the market. There's like 4,000 or 4,500 total stocks. But when you throw in ETFs, then it gets up to 9,000.
Got it.
So this is just a very broad view of the marketplace, right?
Mm-hmm.
But it reflects what's going on. So, here's where it rolled over. Here's where they gave a confirmed down signal right there. And then look at the size of the candles. These first two big candles. The next one was a little small one. The next one was a little kind of big. The next one actually, and I'll zoom in even closer. The next one actually went up. It tried to rally. See the little wick at the top of it?
Yep.
So it tried to rally that day on Thursday, but kind of gave it up, but much smaller red candle. And then look at Friday. Friday was indecision.
Yeah.
Went up, went down, and ended almost exactly where it started.
Crazy.
So that's a spinning top candle. And those kind of candles like you have right up here, this is near the uptrend, they usually indicate a trend change.
Wow.
So that's why I say that next week, and notice the momentum is sort of curving down. Now it hasn't started moving back up yet. So it could just continue to go down.
Yep.
But because of all this, I think the market is just oversold. I think it's ready for a relief rally, and that's what I would call it, a relief rally.
Okay.
It's not, I don't think it's going to rally back to new highs.
Okay. All right.
I think it's just going to, bleed off some of the selling. Some people might say, oh, we've hit the bottom, buy the dip.
Right.
BTFD.
Yeah.
And then they may get in a bear trap.
Yeah.
So
all right.
if anyone didn't sell back here when all the selling really started and wanted to, I mean, if you're a long-term investor, then who cares?
Okay.
Just let it go, right?
Well,
But
the other thing go ahead.
If you're a trader, then you might be disappointed that you didn't sell back here, but you might get another chance to get out if you want to.
Gotcha. Well, the other thing that happened last week, I know it's on your homepage, so we can go back to your website. Bitcoin's halving transpired last week,
Yes,
so I
right.
know that you have that chart. So thought we should at least give a first overview to Bitcoin, given that it's halving. What's oh, look at that chart. Ooh.
It didn't really look like it did that much, frankly. This is sort of it went up a little bit, but it's only just come back to the 21 day. Hasn't even gotten above the 21 day. So it's, I don't know, to me, it's kind of looks like a non-event.
Okay.
We'll see.
Yeah,
We'll see if it continues, but I mean, it's sort of in a downtrend too right now.
Right.
So we'll see if it follows the market or not. I mean, this could rally too, just like the market will.
Right.
If I go back to that S&P chart, and where I showed you right here now, after what I just showed you, this is why I think, if we do get a rally, it'll be back up to the 50-day moving average, which is what all the big traders look at as well. And that's where they probably will sell it too. They will sell into strength. So watch that. If it breaks through and continues higher, then maybe that's it. Maybe the market's just going to go back up to new highs. I don't think so. Let me show you something that I found from Stock Traders Almanac, which I love the work that they do. First off, I'll save that for the next one. So this is they posted this a week earlier, and this is the S&P 500 that was down 3.86%. So this is when the S&P 500, hits it basically gives back, has a drawdown. Ever since 1952, during an election year, the biggest drawdown has been 13%. All right. So when they posted this, it was 3.8%, 3.86. Now it's 5.78% as of Friday. All right. And you can see we are down here, 3.86. It's one of the lowest. 5.78 brings it back up, but still a pretty low drawdown so far. So again, it's not anything to get overly panicked about. It's just a normal market cycle.
Yeah.
If we so that's all of the years, all of the election years, basically.
Right.
The drawdown that happens in the first part of the year.
Right. Okay.
So this is normal.
I love
the
it.
Next one. These are big election year Q1 dips. So these are the Q1 election years, top Q1 election years. So these are all the election years that had the top Q1s. Now we were, and you can see how far we went. That's the red line, how far we went in Q1, which is actually over here. Yeah, end of March right there. That was the third best Q1 in 75 years.
Wow.
Okay.
Mhm.
And the green line is the best Q1 during election years. That's what the market normally does.
Okay.
And I showed this a couple of weeks ago before it started going down. And I said then we've outperformed what the normal 75-year pattern looks like.
I remember that.
So, you know, it needs to come back and reset. And by resetting, it actually has to go below the normal, which is what it's done.
Nailed it again.
And basically what this is saying is, you know, we could have pain, some more choppiness and downside until June.
Okay.
Looking at 75 years worth of data, that's what normally happens. So not until June does the market start to climb higher, and it actually gets choppy again, you know, around the conventions.
Mhm.
So July, August, and not until the election does it start to take off again.
Okay.
So again, it's following the pattern pretty much. It overshot to the upside. Now it's overshooting to the downside. And, you know, I think it's probably going to chop around down here. It might probably will go lower, might go a little higher, but it'll be just a difficult trading period between now and June. And then this is what it looks like. These are the election years versus where we are in 2024.
Mm-hmm.
This is the April performance. Again, for 70 years. So we are underperforming. We're down more than normal, but it's not till, well, this is April 12th, and we're over here right now. We're April 22nd, so we're actually lower than this now.
Right.
So we are definitely further than the norm, further than the mean. Let's put it that way.
Got it.
You know, markets will eventually revert to the mean, but we are further down than the mean right now.
Got it. Very cool.
So let's take a look at real quick some of those Magnificent Seven stocks that you talked about.
Mm-hmm.
And NVIDIA in particular. We'll start with NVIDIA. There's NVIDIA. Let me make this a little bigger.
There you go.
All right, so here's the channel that it was in. Remember the chart I showed you last week? I actually use NVIDIA as an example.
Mm-hmm.
The normal market cycles. So there's accumulation down here. There's the uptrend. There's distribution right in between these two dashed horizontal lines. And then there's distribution. This is distribution, and there's the downtrend.
Right.
This little light colored gray area right here is an open gap. That's where I had my stop.
Yep.
I am out of NVIDIA. I'm out of half of my NVIDIA.
Okay.
I still have the half that I bought way down here at 300. So, and I'll probably hang on to that unless it gets down to the 200-day moving average down here somewhere.
Okay.
All right. So NVIDIA looks pretty ugly.
Yep.
And I don't see anything on here that says it's ready to turn around yet. There's another big, huge open gap down here.
Right.
So that's around 680. So if it closes that gap, I mean, it could go to 700, which is right in the middle of the gap. But anywhere in that area right there is, you know, very reasonable for NVIDIA to go down that far.
All right.
So for people that are hoping to get in, and I've had emails from people saying, oh, is it time to get back in? In fact, even about the market, is it time to get back in the market?
Everybody wants to buy the dip.
I talked about this in my newsletter too. I said, well, and they said, well, you said 5%, could go down to around 5,000, and now it's below 5,000. Does that mean that we've hit support? And I said, support is not support until it starts going back up.
Right.
Right.
Yeah.
You could be catching a falling knife.
Mm-hmm.
So we don't know. You don't know where support is until it stops going down.
Got it.
Which it will someday. It will stop going down.
Yeah, eventually. Yeah.
And then you want to watch for it. And one of the things that I pointed out, if we just look at the things on this chart, I do a session here in my community every other week. And kind of teaching people here how to read charts. And I said that the thing to look at, and I'll do this real quick. If you look at what caused it to go up when it went up, you got the 5 moving average going above the 21. You have the momentum right here going up above the line. This right here, this is a long-term momentum moving up. And you had NVIDIA outperforming its peers right there. So those are real, and this right here, this is a force. I won't get into, I did a whole video on how these are created. So, but you have it crossing right there. So right there in January was the time to buy NVIDIA at around 500, 480.
Okay.
Right around there because of these things. Now what's happened is this crossed here, number one. This crossed right here. The 5-day crossed the 21, actually right through this period, kind of went sideways, but it was crossing over. And then this down here crossed as well. So you've got warning number 1, warning number 2, warning number 3, and then finally last week, the long-term trend crossed.
So what I hear you say is don't rush.
What I'm saying is, and they asked me this on Saturday, they said, so when do you start thinking about getting back in? I said, when all of these kind of symbols here do the opposite.
Exactly. That's what I hear you say.
Whenever they start doing
generally
this,
doesn't happen overnight.
Right. Whenever they start doing this again, then I start thinking about getting in. It's not when it drops to some arbitrary level that somebody might think is where support is. You don't know where support is.
I understand.
You don't know it's support until it starts going up again. But all of these indicators will help identify when that is, and it will give you a much safer entry. And the whole point of technical analysis is risk management. It's not to predict when something is going to go up and down. It's for risk management. It's to be able to get in at the best time to keep from getting stopped out before the stock has a chance to move higher.
Yeah, what I hear you saying is you're not using some arbitrary level. You want to wait till the odds are in your favor.
Yes, exactly.
Right now, the odds aren't on your side.
That's exactly right.
Well, Dan, I know we have a pretty spicy video number 2 coming up that I want to make sure we have time for. I don't want to feel rushed on the second video.
Sure,
so do me a favor, show your newsletter one more time, and we will get into video number 2.
Okay, so breakpointtrading.net is where you can find it. The newsletter is right there in that little box in the upper right. There's no charge, it's free. If you want to be reminded to get it, down here is a zero cost, $0 free plan. No credit card asked for. We don't share or give away emails, so you should never get a spam as a result of signing up here. If you want all of that content that I've been showing you, it's $99 for a year. You get all the other stuff that I've been showing. So
very cool, man. I appreciate you, brother. Look forward to video number 2. Later.
Great. Take care.